Hey everybody, Courtney Smith here with our Wall Street winners for February the 7th, 2022. All right, so this is going to be a little bit unusual because normally my motto is often wrong but never in doubt. This time, I'm a little in doubt, which is very unusual. So a couple weeks ago, I told you that the market would rally and that it would rally into this zone right here, which we did exactly as I told you would happen. Now, what I said then was that I expected to short the market when that happened. So on Thursday, we had a nice down day, and I'm getting ready to short it. But on Friday, we rallied. Now, it was very weak rally. If you look very closely, we closed up, but in the middle of the range. Now, I'm going to come back to this chart in a little while. Let's go through some of our indicators, and then I'll draw a conclusion at that point. The Dow Jones, you can see down here, the green line shows that a big weakness. We got an increase in buying pressure, then it sold off a little bit. Selling pressure came down into a more normal range, but there's still more selling pressure than buying pressure. That's a line that says we might go down. Let's keep going. Over here on the NASDAQ, it's the weakest of the bunch, but the purple predictor is more bullish for the NASDAQ than for the other things. Look at this. It actually made a higher high, whereas the price is way below the previous high. The purple predictor made a higher high. So NASDAQ is more bullish than S&P and Dow. So that tells me that we're going to probably see the NASDAQ start to outperform the Dow and the S&P. But are we going to go higher or lower? All right. Our seasonality indicator, still currently neutral. Down here with the utilities, also neutral. Now here we get a little bit interesting. So we've been following really the lower two here. So Democratic president midterm and second year of a new Democratic president. Those are the two. So that's red and purple. Well, if we look at red, it looks like we're going to trade down a bit. If we look at purple, it looks like we're going to be sideways. So we still don't know which seasonality is the best one, but it's saying neutral to bearish. Neutral or bearish, I should say. Over here, asset allocation. We got a lot of money back out of the bond market. People were buying stocks and selling bonds, so that's bullish for the stock market. And the risk indicator, let's just call it stable. So risk had been going down because people had been shifting into less risky stocks, consumer staples, utilities, things like that. Now, still pretty stable, but they're no longer at this point shifting into less risky or more risky. They're just kind of there in stocks. So now we're back to the S&P chart. And you can see that the indicators are a mixed bag. But I think what we have to do is this. I think the trading strategy is to assume that the market is going to continue lower. NASDAQ might be outperforming the S&P and Dow, so the S&P may go down, the NASDAQ may go up. But if we break these highs, that's a very significant break. And a break of these highs would suggest we're going to head back up towards the old highs. Right now, my bet is we're going to go lower. Global shares, same pattern. So the yield curve it looks like we're going to break out to the upside. We got into this consolidation just under the old highs and the yield curve. And the yield curve is starting to become important again. Bonds broke down. As I told you they would, we're now looking for significantly lower bond prices, which means significantly higher yields. Over here, bond key factors. So let's go through these. The green line is the Treasury bill yields right here. Gold, that's this gold line right here, stable. Let's call that one neutral. Commodity prices, though, remain very strong, suggesting future inflation, suggesting higher bond yields. But the real killer this week was the blue line exploding higher. I mean, dramatically. These are German 10-year yields. This is the biggest competition to the U.S. yield, so that's putting very, very high pressure on the bond market. Net, higher yields. The dollar. Now, if we go back to this chart here, if I'm an international investor and I can get this much more money on German Treasury notes compared to U.S. Treasury notes, that's bearish for the dollar. Money's going to flow out of U.S. dollars and into euros to take advantage of this discrepancy between the two yields, okay? They're going to go and pick up some yields from the Germans. Let's go over here. Here we go. And gold, who cares? It's going nowhere. Our indicators, kind of flat, definitely bullish. I don't know if this is even neutral. It might even be negative. But the point is, this is not a bull market for gold. Crude oil accelerated on Thursday and Friday. OPEC met, and they keep saying they're going to increase supply by about 400,000 barrels a day. But in the real world, they're not increasing it by 400,000 barrels a day because many countries, such as Venezuela, which has the largest oil reserves in the world, Mexico, Iran, Iraq, Libya, all of them can't produce more. And some of them, like Venezuela and Mexico, are actually producing less every month. So they say, okay, we're going to increase by 400,000, but maybe only 100,000 is actually put into the market. We'll never know because Venezuela is not going to tell us. But the demand continues to keep moving higher, more sluggishly than before, but still the supply-demand balance is in favor of demand. So we're now up at $92. I said we get to 90. Gosh, I guess we have to start thinking about $100 oil. Bitcoin is rallying on the back of the stock market. We got a nice Thursday, Friday. I think the best strategy here, you can see the purple predictor is starting to perk up. It's still a bear market, but I think we're probably best off not having a position at all in Bitcoin. All right, thank you, freebies. Love having you here. But don't you really want to sit with the cool kids in the high school cafeteria? Well, the cool kids, they're fully paid up members. Just go to WSW2021.com and sign up.